Alright, so how's it been? It's a Friday, it's the last day of the month. Alright, anyways, right off the bat, I just want to show you something. So on the week itself, this is the 1 hour chart. You can see that there is a seek and destroy profile on ES, which is why for this week maybe it might be a little bit difficult to trade. Right, so the seek and destroy started on Wednesday when it took out Tuesday's highs and lows. Okay, and then moving forward on Thursday, it went on and took out Wednesday's low and Wednesday's high. So seek and destroy doesn't necessarily have to start on Tuesday. It can start on Wednesday as well. Alright, and this is what we have right here. Now on Friday today, personally I don't expect too much price action because we're in the last day of the month. A new monthly candle is going to open next week, so the likelihood of price wanting to run to external liquidities on Friday today is very low. I think it's going to be kept within Thursday's range. Right. With that said, when you take a look at the 15 minutes chart, you can see that this right here is some form of accumulation that price usually likes to run them out, just like what it did over here and over here, right, and over here. So it's a similar type of profile whereby you have the price grinding higher without any true displacement higher. That's how I would describe it. Right, and then now you can see that we are moving towards London's low. Right, so on the 6 hours chart, this is the London's low for ES, and this is the London low for NQ. Right, and then following we have the Asia's low. So these two would be my draw on liquidity for today. I don't really want to look for yesterday PM's session's low, even though it is possible for it to do so. Alright, so looking on the 15 minutes, right now we have a shift in market structure. We have a change in the state of delivery as well. So let's just say if I were to trade today, which I am not going to do so, I'm not going to put risk behind the current conditions here due to the day that we are in, right? Because price can be quite unpredictable and maybe even refuse to run for targets. Right, so right here, this is the candle trading back into this few up close candles. I'm going to go ahead and put a limit order here, and I'm gonna put another one at the opening price, and then I'm gonna measure the range, right? And I'm gonna put one more at the 25% level, and then one more at the 50% level. Right, so my target is very simple: London's low and Asia's low. Okay, let's see how many contracts I can get through for this one. And my stops is way above, up here, this high, right? There's first target, first limit order hit. How many points is this? I think it's about 5 or 10 points. Take profits down here. Yeah, it's about 10 points. It's not there yet. maybe 9 points. Yeah, I think it's about 9 points. If I get filled on just one contract, then I would have to take it off at London. If I have 2 contracts, I'll take one off at London's low, the other one I would leave it for Asia's low, right? For NQ, let's just say if I'm taking it on NQ, this one would be the first. Let me just do one, and the last up close candle is this one, but we do have a breaker down here. I don't think it's going to reach up here, but just in case it wants to run higher here, and this is my model, correct? I am going to put 1 here. Why is it always selling 2 for NQ? It's paper trading, by the way, which is why I have so many orders here, and it's like I'm over leveraging. But because this is a paper account, so just keep in mind, I don't really care about the wins and the losses. I mean, this is what you should apply on the live chart as well, in terms of concepts and logic, right? But anyways, this is just for entertainment. Let's see. Alright, so for ES, I have 2 contracts. I am gonna put 1 down here, and I'm gonna limit by 1 over here. If I get completely stopped out, you will be able to see why trading today is problematic, right? But if everything goes smoothly, we should attack London's low at the minimum. For NQ, you can see that we are trading into this inversion fair value gap. This fair value gap here, I would really like to see it act as a resistance, and I don't really want to see price trading and closing above this entire inversion fair value gap. And if possible, best case scenario, if I were to be looking for Asia's low, I don't really want to see it close above the consequent encroachment, right? So no candle body should be closing above the consequent encroachment. It can spike up and create like what ICT likes to call it, the mohawk, above the inversion fair value gap and hit this order block here, but I don't really want to see a candle body closing above, right? So that's for the parameters that I would set for my current trade idea, right? Now from here, obviously you can see that NQ is the more bearish asset because it is more willing to trade lower. Even on a higher time frames, it wasn't able to make higher highs. So if let's just say you were to short, NQ would be the best asset to trade for shorts because it would be more willing to run for downside targets, basically sell side liquidities and any inefficiencies below market price. Maybe I should put 1 at the consequent encroachment here rather than the order block, right? I mean the 25% of the order block, because anyways I'm anticipating this inversion here to cap the price. So similar for ES, we do have an inversion fair value gap as well, this one. So let's see, look at how it's respecting the consequent encroachment as well. Right, so right here you can clearly see in by 6 minutes, I mean in 6 more minutes, we are going to close this candle and it is going to potentially create a fair value gap, a 15 minutes fair value gap. Right, that could be utilized as well later on. Let's just say if it wants to trade up into that fair value gap to offer a IOFED, that's totally possible. Right, I forgot to pull my stops. Stops over here. The highest body candle for the order block, and for this one the stops will be right here, the rejection block. Okay, alright, so NQ we have 2 contracts triggered. It went back into the consequent encroachment of that inversion fair value gap. Alright, so right now I have 2 contracts, so I am going to put one down here. I'm going to put, I'll buy 1 contract here. I'll cover 1 contract here at London's low, similar to ES. But in an event we get a candle body closing above the consequent encroachment here, I might just cut everything off at London's low. Okay, when this candle closes, I am going down into the 1 minute time frame to see if we can get 1 minute entries if it trades it back into that 15 minutes fair value gap. I'll explain further later on when I get into that time frame. Excuse me, don't mind me yawning. It's boring, it's quite boring on the 15 minutes chart because it takes 15 minutes for one candle to complete. But when it runs, and when it runs like 1 minute chart on the 15 minutes, wow, that is exciting. That type of runs, you can see it in by yesterday's price action right here. Right, this is like a 1 minute candle, right? This type of run. Wow, when it runs like this on the 50 minutes, whoa, that's the best feeling ever. Your targets are just going to be met by one candle. So, and then maybe even overextended by the next few candles. But yeah, those type of runs on the 50 minutes, those are exciting, and you probably won't won't hear me yawning. But right now we are still what do you call it, trading back up into some sort of premium to allow the smart money to sell short. Alright, judging from the way this candle might be closing right now, we have 30 more seconds. If it closes like this, I would prefer price to just leave the fair value gap open and then just trades down into London's low. That would be the best, because that could signify that this fair value gap here could be a breakaway gap, and if it is a breakaway gap, Asia's low is pretty much guaranteed. Alright, let's see. So on Nasdaq, I am going to highlight the 15 minutes fair value gap right here, and then I'll be going down into the 1 minute. Okay, so it's basically this highs. I'm going to remove it now, because now that I can see that it's these equal highs, I am waiting to see if the 1 minute candle wants to run up into this equal highs, takes out this high, and then form that 2022 mentorship model. And then from there, I can start to pyramid down into London's low. That is also a good way. Like, let's just say you want to limit your risk. That is a good way to do so. But in an event, if it doesn't trade up into that 50 minutes fair value gap, then you won't have any trades. Very simple. But judging off from the current 1 minute structure here, we have higher highs on the bodies, Nasdaq and ES, and we have closed below this two up close candles that have formed the higher highs. So the likelihood of it coming back up into the 50 minutes fair value gap is very low right now. Okay. If you can't see the higher highs, this is what I'm referring to. Right here. This candle bodies. Okay, I'm not looking at the wicks, but I'm looking at the bodies. Okay. But lower time frame SMTs are usually not very reliable. Just saying. Especially when it has a higher time frame PD array above it. So let's see how this plays out. Alright, thank you ES. It's probably gonna teleport below this low and give me that London exit for the first contract. In an event when it runs up higher and then leave this lows like this, I will pyramid more when it's up here. Similar for Nasdaq. Thank you very much ES. Let's get it. Let's go. Let's take out London's low. Come on, I know you want it. Once we take out London's low, I might have to, what do you call that? Either cut all the positions or shift my stop losses. Shift my stop loss to break even. Let's see, okay? Let's see how Nasdaq reacts when ES takes out this London's low, and I want to see the candle in terms of like, is there any like a strong movement lower below London's low? Okay, I'm going to remove this limit orders here. Thank you very much. Right now I'm going to shift my stops to break even. And then I really want to see NQ follow through. If NQ does not follow through, I might have to close all the positions, because that could be showing unwillingness to move lower, which is not what I want to see, because we have a fair value gap right here. I don't want to see the profits here go back up and takes out this high, and then I'll be in drawdown, and then after that look for another re-entry. I don't want to do that. Okay. Alright, so just to be safe, I am going to do 2 contracts here for NQ, because right now NQ is showing more strength as compared to ES in terms of the speed and time that it took to take out this low here. It is slower than ES, which means ES has the more likelihood of running the Asia low in the short term as compared to NQ. Right, for NQ I'm going to shift it to break even as well. Let's take a look at the 15 minutes. Yeah. The close of this 15 minutes candle is going to determine whether it's going to trade back up into the fair value gap. Okay, if we get a closing price below this down close candle, this up close candle for ES, this is probably a breakaway gap. I'm quite certain of it. And for NQ, similarly, if we can close below this up, green candle, we are probably, this is probably going to be a breakaway gap until we reach deeper. Right now, why is it like this? Let me just shift it higher here. We have 7 more minutes for NQ to run that low. the previous candle's low. Okay, if we close above 50% of this up close candle, I will cut my position for NQ, because that's something that I don't want to see. I want to see it just liquidate down, melt down. Right, so on the 50 minutes you can see that ES is obviously more willing to trade lower. Alright, this is good. I want to see teleportation candles for NQ very soon. We only have 6 minutes left, and this 5 minutes candle is gonna close. We're gonna have a 5 minutes fair value gap. I hope we have it, because if we don't, then that is problematic as well. Come on now, NQ. Stop teasing me. Alright, I like ES reaction. Okay, if ES is willing to trade even lower, I would like to see it drag NQ together with it. Right, this is exactly what I want to see. ES is going to drag NQ together. Come on now, NQ. Come on. Do it. I know you want it. I know you want the London slow. Let's go get it. We have 4 more minutes. If we do not take London slow in 4 minutes time, I will cut everything, which means I'll close all my positions. I mean, for NQ, if we don't take it, I'm gonna close all positions, including the ones on ES. Right, so because capital preservation is much more important than being right. Okay. We are probably trading into that 5 minutes fair value gap on NQ, I'm guessing. Yeah. We have a small little volume imbalance here. Let's see if there is enough. Should be, because we're really near to the lows. I don't want to see it fill up entirely this fair value gap to send it lower. And it's being quite lethargic at the lows, which is not something that I like to see for price. ES price action in terms of delivery, it's much more better than NQ. Okay, 3 more minutes. We're trading into that. We're inching up into that 5 minutes fair value gap. So just to be clear, the 5 minutes fair value gap is inclusive of this volume imbalance. Okay. Let me just highlight it in gray. What is this? Well, there's a lot of lines here, but anyways, okay. We only have 2 more minutes. 2 more minutes left. Okay, it has reached up into that inefficiency. If we were just to draw it on the previous candle's high. Right now, I would like to see displacement. I don't want to wait. I don't want to see it hang around here anymore. We have less than 2 minutes. We have hit the consequent encroachment. Thank you, come on. Don't be a jinx. 1 minute left. Am I gonna see a 30 handle? No, not 30. A 40 handle 1 minute candle. Am I gonna see that? Oh, nice. Okay, 20 more seconds to go. Okay, I'll close ES first, and I'll manage NQ. Okay, right now, shift my stops to this high. I'm gonna close one. Trade buy one, market. I'm gonna close one right here, and I'm gonna put my what do you call that? Stop loss right above this fair value gap. Okay, right above here. Because if it completely overlaps this fair value gap here, it's probably going to run for these highs. I don't want to see that happen. Right, I'm closing one and then I'm managing one position right now. I'm only holding it for London's low. If it wants to do so, either that is going to stop me out. That's it, right? And that will be the end of the session. Fantastic. Is it lagging? Okay. Alright, it's fantastic. Pretty much done for the day. Let's take a look at the executions. Wow, yes, just went down the Asia's low. Wow, in one single 5 minutes candle. Right here. Right. So here, let's take a look at the executions, shall we? Settings, execution labels, right? Similar for ES, execution labels. Okay, don't be mistaken. This close is right down here. It is not London's low, right? So the concept is very simple. When you take a look at the current market profile, so to speak, we are trading within Thursday's highs and lows. It's a seek and destroy day. Seek and destroy market profile for the week. Alright, And then we have price trading up into the Thursday's premium. Alright, so this is the dealing range, low and high. We are in premium. We have left London's low and Asia's low. On the 15 minutes, price has tried to run higher, but failed to do so. And when you take a look at 9:30's candle, which is this candle right here, it's a up close candle taking out buy side liquidity. So that is usually a false move. So whatever 9:30 does, or 9:30 to 10 o'clock does, that is usually a false move, right? To trap all the retail traders that want to long based on the overnight performance of the market. So the overnight performance has been moving higher. At 9:30 it pushed it up higher to trap everybody there, and then as you can see right here, it's trying to go higher and it's stopping out shorts, right? So anybody that is shorting up here is stopped out many times. And then we have a displacement lower on a 15 minutes candle right here at 10:45. This is 10:45 candle. We displaced and we closed below the low that made the high. That's number one. So it validates this up close candles as your bearish order block. And then you have your inversion fair value gap right here, which price has utilized before to take out this high, the most recent high. Similar for NQ right here, you have the inversion fair value gap. My entry is within the inversion fair value gap and within the bearish order block. So this consecutive up close candles is the bearish order block for ES. And for NQ, because it's more bearish on the higher time frame, you don't really expect it to reach up into this up close candles because there is a inversion fair value gap below. Okay, if it is able to reach up there, it means that we are probably not going to take out the lows that easily. Okay, and on lower time frames, you can see how I managed my trades, and I have decided to exit everything at London's low for NQ because on the lower time frames, it is showing unwillingness to trade lower as compared to ES. So ES was the better asset for shorting in this scenario, right? You can just compare the price action from this up close candle all the way down here and NQ's up close candle all the way down here, right? You can see when you are watching the price action, you can anticipate and you can observe how willing is the price. How the price is willing to move or not. All right, and this basically ends the trading session for today. Let's see if I have missed out on anything. This is demo trade, by the way, so don't hold me accountable for anything. It's demo trading, right? Alright, and I think that's about it for today. I hope you enjoyed this session here, and I will talk to you again. Good luck trading next month, next week. It's gonna be, I think it's gonna be a good trading month. September and October's are usually good trading months heading into the end of the year. Alright, so good luck, and I'll talk to you again.